How's it going, guys? Hope you guys are doing well. Gonna try out, I guess, soft spoken. Some people have been asking for it. I also just want to start off saying that the support from you guys has been like insane and means a lot to me. I don't think I deserve all of it, but I'm gonna keep making content. I enjoy it a lot. Obviously, this is cars and money are topics that I am very interested in. So, yeah, appreciate it, guys. I'm going to be looking at my dividend portfolio today. Bunch of new people on the channel, so I just wanted to preface this with saying that, one, this is not financial advice. None of this is financial, legal, or tax advice. I'm not a licensed professional, so, it's for entertainment. Do your own research, consult a professional. Sharing this more just for fun. Most of my money is just in a total market index fund, because I think that's like the safe route to go. Most people don't beat the market. This fund or this portfolio here will probably underperform, but it's interesting to me. I like following the companies, and yeah, that's why I do it. So we'll hop right into this, and obviously, let me know what you think of the soft spoken. This can be the last time I do it if people are not a fan of it, but I know there's some people asking about it. Yeah. So portfolio's doing okay. Market's been pretty good this year thus far. So, everything's kind of doing okay. I don't want to credit that to any of my picks. Overall, right now, portfolio's sitting at $2,333.21. I've contributed a total of $2,380 since I started this thing. So down about $46, or 1.5%, 2%, depending on how you calculate it. I have broken $100 in dividends that I've received, which has been pretty cool. Yeah, so let's run through the holdings real quick. So I have Blackstone, big asset manager, big real estate company. They're my biggest win right now in the portfolio. Up 41.5% on them, $80, which is pretty neat to see. I don't know if I would have picked them to be the winner in the portfolio if you had asked me like a year ago, but I also have the earnings for Blackstone, Signa, and Visa, as well as Torrento Realty pulled up in the background, so I'm going to run through those kind of after I run through these holdings. Zoetis up in almost 19%. They're an animal health company. Signa up 14.5%, health insurance player. I'm sure many of you guys are probably familiar with them. My insurance is with them personally. Visa, 7%. I think that's either that or Medtronic is the newest pickup in the portfolio. I can't remember. But they're up 7%. They're doing okay. Medtronic up 4%. Nothing crazy there. Medtronic is a medical device company, if you guys are not familiar with them. And everyone knows Visa. Torrento Realty up 1.6%. Kind of disappointed in this one. This is actually the only one in this portfolio that I hold outside of this portfolio. I have some shares in my Roth IRA. Those shares I've had for longer, so they're up, I think, like 15%, but it's definitely underperforming. I do really like it long term. They're a REIT focused on logistics, warehouses, and like distribution or flex spaces. But they're solely in like 6 major U.S. metro markets where there's limited or declining supply of industrial real estate. So I think like long term, there's really not a scenario where that, in my humble opinion, not financial advice, where that will go down in value. So there's that. Postal Realty, REIT that focuses solely on leasing to the USPS. Anything from like their warehouses, but most of them are like the more local, like post offices, where the back portion of the building, maybe the back 2/3, is like a mini warehouse where they sort the packages and send the trucks out. And then the front part is like where you can go if you want to mail packages, or you have like a PO box. This one's not done great either. Pretty big dividend payer there. I think it's above 6% yield, but down 2% on the actual holding itself. It's definitely not a growth story, but I kind of expected it to do a little better than it has. I think rates have had something to do with it. Equity Lifestyle Properties. So this is an interesting REIT. They have a mix of 3 main categories that they operate as part of their REIT. One is campgrounds, one is manufactured housing, primarily senior living, but not entirely. And they also have a business segment for marinas, so rentals for boat slips. I think it's a really interesting business. A little concerned with maybe the marina portion coming into what seems like it might be a little bit of an economic slowdown, but I think COVID showed that camping can be a pretty viable option for people who want a cheaper or more independent vacation, which I think could potentially see an increase if we do kind of see an economic downturn. But I'd say ELS is probably the one I'm most worried about out of the portfolio. I think it's the most discretionary, aside from their manufactured housing community, obviously. But then we have American Tower. They're a cell tower and data center REIT. Pretty big exposure internationally, but conglomerate. Don't have too much to say about them. They've had a really rough run. Not too sure what's, the damper on them. Getty Realty down 15%. They are a REIT that focuses on a number of automotive-related plays, but primarily gas stations. They have some exposure to like car washes, automotive stores, quick lube, stuff like that, oil change places, but I think it's like 80%, something like that, is gas station properties, which I think is a really interesting play. And they're surprising me that they're the biggest loser, down 15%. Alright guys, so I paused the video there for a second and kind of went back and reviewed what it sounds like. I think that, I don't know, you guys let me know what you think. I definitely do it when I whisper as well, but I have a tendency when I'm like rambling or I'm kind of just talking in like long form content to go like use the like interjection before I say a lot of things if I'm like thinking on the fly. And I definitely do that when I'm doing these whispered videos as well, but I think it comes across way more with the like soft-spoken. So let me know what you guys think. I'm gonna do whisper the rest of the video, but got Blackstones earning results pulled up here. So this is their fourth quarter and full year results. So they did declare a dividend of 94 cents per share to shareholders ex-dividend date of February 5th. Dividend will be paid on February 12th. They have over $1 trillion in assets. Just insane to think about. Assets under management, not their assets. So, wow, for the quarter, they have almost the exact same management and advisory fees as they did this quarter last year. That's like, I don't know if that's impressive or weird or what. But we'll look at the total revenues here. Maybe we'll loop back. Total revenues for the quarter are down significantly. They had a big loss in their performance allocations and their principal investments. I don't know exactly what that means. Hopefully they'll get into it later in the presentation, but total year revenue down slightly. Not too bad. And their expenses are basically flat year over year. Net income down slightly. Net income per share, diluted, down decent amount. Their business it's somewhat cyclical, depends on kind of market conditions and where money's moving. People have a tendency to, put cash on the sidelines or go to more non-managed fixed income investments like bonds or CD ladders or money markets and other stuff when the market is not doing great or when rates are high. So I think we're seeing some of that. They could see money kind of re-entering, coming off the sidelines with rates continuing to decline as they're supposed to do, end of this year in theory. But sorry, silence my phone. Just put it on the seat behind me. So total AUM of $1.04 trillion. Insane. Dividend, yeah. Repurchased a little bit of shares, but nothing crazy. They do their dividend, I think it's like a portion of their distributable earnings. I think that's how it's calculated. I don't think it's like a set dividend amount per quarter, which is definitely slightly unique versus most other companies, but kind of more of the same. Investment performance. Wow, corporate private equity has done really well this year. Actually, I guess the market did really good in 23. What am I saying? Their real estate has not done great. Neither has my REITs. Their AUM did increase quarter over quarter, which is nice, or year over year, I should say, for the quarter. Big increase in real estate, relatively flat private equity, big increase in credit and insurance. Yeah. But overall investment performance eligible AUM was rather flat. How's that possible? I don't know. Keep going. AUM increased 3%. Entered into a joint venture with the FDIC to acquire Signature Bank. I forgot about that. Yeah, BREIT. That's why they were in the news a while back. Realizations in the quarter included the BREIT partial sale of the Bellagio, Las Vegas, for a little under $1 billion, which is insane. Their real estate is down a couple percentage points in value. Private equity AUM up 5%. Total AUM for credit and insurance up 14%. Wow. This stuff, it really gets in the weeds. I'm not gonna lie. This is why I don't invest in a lot of banks, but they got all their different funds here. Investment records. They got the IRRs for their different funds. Wow, 96% IRR on their BCP Asia fund. That's insane. Pretty cool. Then we got Signa here. I guess people aren't too worried about the Blackstone performance because the stock has done exceptionally well. I think given the climate, not a lot of finance companies are doing excellent. So, all right, get into the that stuff. EPS of $6.79. Income from operations. Looks like they have it split out. Total revenues of $51.1 billion. 20 million customers. Pretty cool. Up 1.8 million year to date. That's pretty neat. Cash flow from operations, $1.5 billion. And for the full year, EPS of $25.09. It is an expensive stock. It's like $300 and something. Revenue of $195 billion, which is insane. Cash flow from operation, $11.8 billion. And for full year 24, they're giving guidance EPS up very decently to $28.25. Wow. Revenue they're expecting to increase by $40 billion. Jeez. That is insane. They're going to break down. Oh, that's it. That's the entire presentation. They don't go into a lot of detail here, huh? Well, it looks like they're doing well without digging into the weeds. Got Visa here. For the first quarter of 2024, net revenues up 9%, which is pretty solid. Expenses are down. Oh, wait. Okay, that's that's a gap. Okay, so they're making adjustments and they're adjusting for foreign currency impact. So net revenues up 9%, operating expenses up 8%. Earnings per share up 10%. Net revenues up 9% to $8.6 billion for the quarter. Net income, their reconciliation of net income, $4.9 billion. EPS, $2.41 per share. Pretty good. Payment volume up 8%. Cross-border volume, excluding intra-Europe, 16%. Cross-border volume total, 16%. Interesting, they broke those out. 9% increase in transactions. Looks like payment volume growth slowed a little bit over the quarter. That pickup is probably for the holidays right there. Looks like debit is actually their biggest growing market. Interesting. Bigger than credit. Would not have guessed that. International debit is up huge. It's pretty cool. Total cards. Yeah. Double for debit. Data no longer includes volumes and transactions for Russia clients. Yeah. Alright, net cash $3.4 billion, free cash flow $3.3 billion, return to shareholders $3.35 billion in share repurchases and $1 billion in dividends. Pretty nice. Their dividend growth rate is actually very solid. Seems like given the climate they're doing relatively well. And here they're giving guidance. Net revenue growth upper mid to high single digits for the next quarter and low double digits for the full year. Operating expense growth low double digit for both next quarter and the full year. EPS growth high teens for the next quarter, low teens for the full year. Not bad. And lastly, we have Toronto Realty. Most of this is literally the same exact thing every time. We're not going to look at net income. FFO per share, $2.22 for 2023, up 22 cents over 2022. So roughly a 10% increase. Pretty nice. Same store net operating income growth. Yeah, it's fine. $73 million in acquisitions in the last quarter. $484 million in acquisitions for the year. consists of a huge purchase they made in Florida, near Miami. So that's kind of like half leased, half not. A lot of it's still under development. It's massive development. I mean, multi-$100 million deal. Occupancy looking relatively solid, 98.5% ending for the quarter. These are their 6 markets I was talking about. They have about $16 million in million square feet, in the portfolio. Talking about their improved land. This is their research on shrinking or no net new supply markets. 21% of portfolio in new supply submarkets. Wonder why that is. I don't know if I remember seeing this before. And here they're just highlighting some areas where there's been shrinking supply. Population density for their portfolio is thus way higher compared to other REITs because they focus specifically on these major metro areas. Yeah, looking pretty good. Nothing insane there, but again, they've been super mid in their portfolios. So, in their growth. As far as stock price goes. So, kind of expecting to see an increase at some point. But hope you guys enjoyed the video. Drop a comment down below. Let me know soft spoken versus whispering thoughts, and hope you guys are doing well. Thanks.